Okay, before we jump in, just the usual quick but important disclaimer. Everything we're about to cover is for educational and informational purposes only. This is not financial advice, so please, always do your own research.
We analyze markets and stocks for educational purposes, so hey, let us know in the comments what company you want us to break down for you next.
On one hand, you've got this massive geopolitical shockwave coming out of Iran. And on the other, there's this really baffling paradox surrounding NVIDIA's record-smashing earnings. So the big question for all of us is, what's going to change come Monday?
Yeah, it was pretty much a bloodbath this week. As you can see, the S&P 500 and the tech-heavy NASDAQ were both deep in the red. And for the NASDAQ, it was a particularly rough month. Actually, its worst performance since last March. Ouch.
And you know, the pain wasn't just in the tech sector, not at all. The Dow took a serious nosedive on Friday. And look at the Russell 2000. That's a key indicator of investor risk appetite. It was the hardest hit of all. That tells you investors are clearly running for cover.
Yeah, think of it like this. You've got major geopolitical escalation heating up, then right in the middle, you have the tech market grappling with Nvidia's incredible earnings, but basically saying, okay, prove you can do it again. And to top it all off, we've got stubborn inflation and the threat of new tariffs just crushing any hope for the Fed to cut rates soon. It's this messy combination that's breeding so much uncertainty. So let's really unpack the two big events that basically lit the fuse on all this anxiety over the weekend. First up, the Iran shock. So on Saturday, reports dropped that the US and Israel launched major combat operations inside Iran. This is a huge deal because it immediately puts the Strait of Hormuz at risk. And you have to understand, that's a choke point for something like 20% of the entire world's oil supply. The market is already bracing for a massive oil spike when it opens. And you can see the immediate reaction right here. I mean, it was instant. As soon as that news hit, we saw this classic flight to safety. Gold just exploded past $5,300. That's a textbook signal of fear, sending capital scrambling for safe havens. And then we have the second shock, what we're calling the Nvidia paradox. Get this. The company posts an absolutely mind-blowing $68.1 billion in revenue. That's a 73% jump year over year. I mean, a total blowout quarter by any measure. And yet, the stock sold off. It fell about 6%. So what in the world is going on here? You know, Morgan Stanley even called it the largest, cleanest beat in semis history. That tells you just how epic these numbers were. So the problem isn't performance, it's expectation. The market's in this prove it to me mode. It's worried that the insane AI spending from the hyperscalers, the giant cloud companies, just isn't sustainable. The bar has been set almost impossibly high.
Hey, if you're finding this breakdown helpful and, connecting the dots, do us a quick favor and just hit that like and subscribe button. It really does help the channel out. And if you want to dive even deeper, we put together a full report with all the details, and it's linked for you right in the description below.
So, with these twin shocks hitting at the same time, how did the ripples spread through the broader market? Let's take a look at the cascading consequences. While the divergence is pretty stark, the US market was just a sea of red. The NASDAQ dropped almost 3% in February, which was its worst month since March of 25. But at the same time, if you look at foreign markets, especially in Asia, they were actually up. So the US is clearly struggling, and these new pressures are, well, they're not helping. And if we zoom in on big tech, the pain was pretty widespread. The one outlier was Meta, which actually got a nice boost from a new GPU deal with AMD. But the rest of the Mag 7, all down. Google got hit by fears over capital expenditures, CapEx, Amazon's dealing with tariff worries, Apple's got those ongoing China concerns, and yeah, like we said, even Nvidia got punished after that incredible report. So where is the money actually going? Well, we're seeing a classic defensive rotation play out. Capital is pouring out of the riskier stuff, like tech and financials, and flowing right into traditional safe havens, like energy, obviously driven by the Iran news, and utilities, as investors just hunt for safety. And this really gets to the heart of the great safe haven debate. On one side, you've got crypto, digital gold, which absolutely crumbled as the fear and greed index slammed into extreme fear. Bitcoin broke below key support levels. But on the other side, physical, old-school commodities like gold, silver, and crude oil all surged. It's pretty clear, in a true risk-off moment, the market made its choice. Hey, if you're finding this breakdown useful, do me a favor and hit that subscribe button. Share it with someone who needs to see this. And if you really want to dive deep, the full source report is linked right there in the description for you. All right, so we've laid out the problem. Now let's pivot. Let's move from just analyzing to talking strategy. How do we actually navigate these headwinds? You know, if you look past the huge tech names, the picture gets a lot clearer. This whole AI boom isn't just lifting every single boat. We're seeing a really sharp split between the winners and the losers. Just look at AMD, it's up almost 9%, while another name like CoreWeave has plunged 20%. And here's why that's happening. AMD's riding this massive wave of momentum from a new partnership with Meta, which really cements it as a legitimate alternative to Nvidia. CoreWeave, on the other hand, totally stumbled. Their guidance after going public was a huge disappointment, and it basically crushed their credibility as an AI infrastructure play. In this kind of market, it really does all come down to execution. So, how are some savvy investors thinking about this? Well, one strategy that's getting a lot of attention is focusing on what they call halal or clean balance sheet portfolios. What does that mean? It's pretty simple, actually. It's about investing in companies with strong fundamentals and, critically, low debt. This lines up with principles of Islamic finance that avoid interest-based business. In this environment, that translates to focusing on solid stocks like AMD, screening for energy companies that aren't loaded with debt, and anchoring everything with physical gold, all while steering clear of speculative assets like crypto. Okay, so with all that in mind, here is your watch list for Monday's open. You're going to want to keep an eye on XLE to see how the energy sector reacts to Iran, and GLD as your main geopolitical hedge. In tech, watch AMD and Broadcom. They're the key AI alternatives right now. And of course, keep your eyes on the VIX, the market's fear gauge, to see if it spikes over that key level of 20. And that brings us to our final section, the actionable playbook. Let's boil all this information down and figure out how to turn this signal into real action. Because really, the question on everyone's mind is simple. With all of this chaos swirling around, what's the actual move? Here is the playbook. Signal over noise. Number 1. Brace for the energy shock. Monday morning is going to be all about the Strait of Hormuz. Think about rebalancing into energy and physical safe havens like gold. 2. Look for AI value outside of Nvidia. Seriously, that bar is just too high right now, and the smart money is already rotating into alternatives like AMD and Broadcom. And finally, number 3. Don't fight the Fed. Inflation is still hot, so a March rate cut is off the table. That means prioritizing defensive positions in things like staples and utilities just makes sense. Look, it's definitely shaping up to be a volatile week. It's going to be driven by geopolitics and this really interesting shift in the tech narrative. The absolute key is going to be separating the real signal from all the noise. For more weekly briefings just like this one, make sure you're subscribed. And as always, remember, this is all for educational purposes. Please do your own research.
Look, things are moving really fast, so be sure to follow us on our social channels for the latest updates as this all unfolds. And hey, if you want to get our full, detailed watch list, you can download it for free from that link in the description.